not question authority.
This is the currency of the resistance. What is Bitcoin?
So Max, in our journey from the Genesis block to the moon, we've gone through many things, and in 2017, we enter the culmination of the block size war, and basically the user-activated soft fork will win the day. But we also find the initial coin offering jumps onto the scene in 2017. And I'm going to start with the initial coin offering, the ICO story, because this was a huge story in 2017. More than $5.6 billion of capital was raised in 2017, according to metrics from Token Data Team. This compares to $1 billion of traditional venture investing in blockchain startups in the same time frame, and a mere $240 million raised by token sales in 2016.
Hi, I'm Max Kaiser. This is the Kaiser Report. I'm preparing my initial coin offering in the ICO for a new crypto sensation, Max's Fish-O-Matic. You know, so many bankers are jumping off buildings and jumping off piers now that the fiat world is being crushed by crypto. So with Max's Fish-O-Matic, you can fish for these dead bankers. I use patented dead bait. ICO, I think we'll probably raise $150 or $250 million for this, Stacy. I'm giving you pre-ICO coins at an 89% discount. What do you think?
Why 89%?
Oh, I have to share some with Brock, and this is the deal he negotiated with.
So let's compare this to the traditional financial system. You had IPOs, which were initial public offerings. Those were usually the way for a venture capitalist to exit their investment in a .com company. Here, you were having it all in one. The investors, i.e. the donators to these projects, were giving money to the founders, and that was the founders' exit. Here, you had a situation whereby the people donating to these ICOs were giving the money to these founders before any product had been built. It was just a white paper.
Right, so the timeline's all messed up here because usually people start companies and 8 or 9 out of 10 fail, but they do a friends and family round, they do some money raising, and they typically look toward 8 or 9 years down the road before they do an initial public offering, and that's after they've attracted 1 or 2 rounds of venture capital, and then the venture capital is exiting on the IPO, and the public market is participating in this new company, and then it has a life post-IPO, and will it be the next Microsoft or the next Apple? And it takes 10, 20, 30 years for this all to play out. Whereas on the ICO, you had the formation, the creation, the organization, the exit, and the monetization all happening with one event. It just, here's the idea, let's exit.
On average, they returned 12.8x in the initial investment in dollar terms, 7.7x in ETH, and 4.9 in Bitcoin terms. So they were massive successes in 2017. Everybody involved, all of those who were donating to the projects, all those who were hosting these projects, doing the ICOs, everybody won.
Well, the ICOs gave birth to this concept of the X return. You know, to put this into perspective, during the dot-com mania, it was considered to be unbelievably a windfall event if you got 60, 70, 80% pop on day one of your IPO. Here you're talking about 10x. That's 10 times the initial, or 20x or 30x. So the idea of this X, that, you know, an investment in these ICOs would generate X returns, you know, multiples of return. And, you know, that became normalized, which was fascinating.
This was the beginning of absolute hysteria. People all over the world, you hear stories of South Koreans just cashing in all their pensions, their mortgages, buying up all sorts of ICOs. 2,000 coins, like there was an eruption of coins. In 2017, there were 435 projects.
Well, at the end of the day, it's what's the point of this token? And you have all these different tokens that do different things. And at the end of the day, you know that value is what we all agree on. most of these new tokens, they're not really meant to be stores of value. They're not really meant to be anything. In fact, one of them, like EOS, it says right there on the main website, this token has no value. This token is not a security. This token does not access our website. This token is literally for us to raise funds from you, and that's it.
Right, so you're referring to a paragraph in the EOS
Yep.
description that says quite plainly, what you're buying here gives you no rights, no equity, it's worth nothing, there's no guarantee it'll ever have any value. The purpose of this disclaimer is to make them exempt from all securities laws, they hope.
Yep.
So, but people buy into it anyway because it's a wink and a nod. They say, yeah, I know you have to put that in because you're trying to bypass the existing law.
If it quacks like a duck, if it acts like a duck, it's probably a duck. I've spent many awoken nights pondering the scientific situation of the ICO, and I've come up with what I call is the scientific word to use, FOMO, fear of missing out. That's all this is. It's just you tell your friends, did you buy this token? Everyone's buying. I have tokens that people are messaging me that haven't even gone on sale yet, that are still in pre-sale, and they're not even transferable, that people are trading. So like one sells to 25 cents, and then they pre-sale, change the price to $1. Now all these people who bought it at 25 cents are now selling it at 75 cents. And what are they trading? They're trading nothing.
How many angels can fit on the head of a pin, right? So here you have every single element of finance, the exchanges, the marketeers, the business people, the venture people, all existing in one space that didn't exist, the head of a pin. And they exploded and cashed in for billions, but none of those things existed. They were merely a shadow of those things. The shadow of actual finance existed in an ephemeral, ethereal ICO representing nothing but had an exit.
And there was about a 18-month period when these things were all the rage in crypto. Are they securities, or were the tokens themselves securities or investment contracts? Probably mostly yes. And if you listen to what the SEC has said, and if you look at the enforcement activity in the space, you'll reach that conclusion as well.
Oh, yes. Well, to get around all regulations, they positioned these initial coin offerings as gifts that you were giving the company, and to say that they weren't securities, they wanted to get around security laws. But the people that were giving the gift of their cash to these companies and getting nothing in exchange, I'm not sure they're surprised when the company decided that they would just accept the gift of their money and run away.
So Max, while everybody's attention was diverted to these initial coin offerings and these hundreds of tokens being issued, the block size civil war was still ongoing and it was coming to a head. In May of 2017 was Consensus. Consensus is a conference, a Bitcoin conference, a cryptocurrency conference by that point, which is very expensive to attend, and it's sponsored by many big sort of corporations. And at this event in May 2017 happened the New York Agreement. Barry Silbert of the Digital Currency Group, one of the very early adopters of Bitcoin, created this agreement called the Bitcoin Scaling Agreement at Consensus 2017. And what they decided that they would implement SegWit and double the block size from 1 megabyte to 2 megabytes, so 2x. What happened is that once this document, the New York Agreement, and the 58 signatories was released, the users of Bitcoin, they were very upset to hear that yet another agreement behind closed doors had happened, and basically the hat and meme wars erupted. The hat, no 2x. UASF.
The UASF, or the User Activated Soft Fork. So this is something that occurred a few years ago as part of the scaling debate, where due to frustration of how difficult it is to change the rules in Bitcoin, some people started looking around and trying to find I would say centers of power. And one of those centers of power, or at least things that appears to be powerful in Bitcoin, is the miners. So there were various groups that were, coming together, trying to rally political support from mining pools and large hash rate providers, and basically getting them to signal that they were going to change the Bitcoin protocol in a certain way. And the threat, of course, being that anyone who disagreed with those rule changes were going to find themselves on a blockchain fork that essentially had no mining activity, no new blocks, therefore no new transactions, and it was basically useless. But the UASF movement came about and basically said, you know what, we don't believe that the miners have the power that they believe they have. Yes, they have hash power, but the hash power, while you can spend millions of dollars brute forcing this cryptographic equation to create a new block and put it out onto the network, that all of that energy expenditure, all of those capital resources cannot force a $10 Raspberry Pi running on the network to accept that block. That 5-watt tiny little computer is running its own rules and will look at that block and say, you know what, you broke the rules, I reject it. I don't care how much money you spent on it.
The work that miners do does not have value because they did the work, any more than digging a hole has value just because it cost a bunch of calories to dig it. You have to dig holes where people find it valuable. You have to do work that people find valuable with cryptocurrencies. And so the user-activated soft fork merely changed what the hodlers of last resort decided to value in terms of the work that the miners were doing. And so this put a huge asymmetric leverage in favor of the people running the full nodes and greatly decreased the apparent power that the miners have, because the miners can go mine as many blocks as they want, but if nobody is going to give them a block reward that's valuable for doing that work, well, you just burned a bunch of electricity.
From that standpoint, the belief was that, in fact, the users in aggregate, the people running these nodes, they get to decide whether or not to accept the blocks from the miners, in fact, have more power than the miners. So, as a result, we had a bunch of people create this UASF fork of Bitcoin Core, which basically said, you know what, we're drawing the line in the sand, and on this date, we're going to start activating these features, and if your blocks don't activate the features, we're going to reject your blocks and you're not going to get paid anymore.
Nobody could see coming that false confessions would be that prevalent in this population of wrongful conviction.
If you look at any interrogation out there, what you'll see is threat, promise, lie, lie, lie.
The process of interrogation is designed to put people in just that frame of mind. Make them uncomfortable, make them want to get out, and don't take no for an answer. Don't accept their denials.
She said if I would cooperate, sign a statement, that I would be home by that time the next day.
There's a culture of unaccountability, and police officers know that they can engage in misconduct that has nothing to do with solving a crime.
In October 2017, the German newspaper Die Welt published an article claiming that the European Union had lost 30 billion euros as a result of its very anti-Russian sanctions. It particularly affected Eastern Europe. Many Polish farmers went broke and even committed suicide.
Tak, no w zamkniętych kontrolach zagazowanych, gdzie tam mamy 1,5 tlenu, 1,5 dwutlenku węgla, no to tam jest, powiem, że lekka śmierć, wchodzisz i zasypiasz, nie?
Und diese Äpfel halt, die ja, die Hälfte davon etwa wäre nach Russland gegangen, jetzt halt da sind und teilweise keine Verwendung haben. Also ich denke, dass in den letzten 10 Jahren in Polen sehr viel gepflanzt worden ist mit Richtung auf den russischen Markt. Und dass dann 2014 dazwischen kam.
July 2017 was the resolution of the block size war. The users of Bitcoin determined the outcome of Bitcoin. It wasn't the powerful miners. It wasn't the billionaires. They introduced BIP 148 and the user-activated soft fork. August 1st, there was a soft fork to basically save Bitcoin. At the same time, there was also a hard fork that happened on August 1st, 2017, and that was to Bitcash, or Bitcoin Cash. I know you're not supposed to say Bitcash because the founders of Bitcash don't like that word, but that was the fork. Remember, the day before, everybody was hanging on the edge of the seat that there's going to be a hard fork to Bitcoin Cash, and there's going to be the user-activated soft fork. Will Bitcoin survive? Nobody knew for sure. And it survived. By the end of the day, August 1st, it was still around, it was still there, and then it set the stage for the second half of the year.
And what we actually did was we issued this user-activated soft fork, this ability to, with our own full nodes, decide what Bitcoin is for us. Because Bitcoin, because it is decentralized, Bitcoin can be many things to many people, but you, the individual, have the ability to decide what Bitcoin is for you by running the Bitcoin software and enforcing the rules that you believe to be Bitcoin. And so that is what we did as a people, as a community, millions of people across the world. We ran the user-activated soft fork, which was the version of Bitcoin that we believed to be the real Bitcoin. And so that, of course, might have caused a chain split, and that ended up scaring some of the larger corporations, some of the larger mining companies. They didn't want to see a chain split, so they essentially backed off. And it was a very public loss and a very public win for the community. This really something that was what I like to call is completely unprecedented. This was really the Goliath, type of battle that we saw here. And at the end of the day, it was the users, it was the community that won against these large corporations.
And so this was a defining moment for Bitcoin because it set up very adversarially the position between certain users and the miners. And the miners, at the end of the day, seemed to relent pretty quickly. And this is because the economics and the game theory vastly support the individual or the hodler and the miners, they actually have a very weak position in terms of the game theory. Bitcoin is just a fascinating social and economic experiment in this regard.
Of course, that brings us to the scaling debate.
Yep.
So where are we in this? So apparently there's been a breakthrough. Some argue it's not as clean cut as others suggest. Where are we on the scaling debate in Bitcoin, Charlie Shrem?
I'm a free market person. I believe that markets are efficient when we allow them to be, but they're not optimal. It's not going to be as fast as human beings we want it to be. We want instant gratification. We want things done now. So yes, the scaling debate took 2 years. However, how many bad solutions came and went? How many things happened that could have effectively...
Why was there a need for a scaling need? What is it?
Bitcoin is growing, and Bitcoin is growing to a point where we need the ability to have more transactions. We need to rival the Visa or MasterCard network. We need to rival SWIFT. We need to scale the right way.
But the other side of the coin says, no, that's not really true. You got to keep it as a store of value. And, you're just mucking around with it.
Even the store of value folks think that we need to scale, but they think that it needs to be scaled in a different way. So here we have a market-created compromise. And as we saw the other day, it passed with over 90% consensus. When have we seen any Senate or Congress that have been able to do something with 90% consensus? It's almost never. This took a long time, yes, but it takes a while to get a perfect market solution. I think this was one of the most bullish things that could ever happen to Bitcoin. What if some bad actor came along with $500 billion and said, hey, I want to change Bitcoin to suit my needs? With a lot of money, you could influence a lot of people. But as we saw, a lot of people tried doing that. Craig Wright, all these different companies and unlimiteds and all that, they tried to influence Bitcoin in their own way, but the market didn't allow them to do it. And the market created the perfect compromise and it passed. Everyone got together. And that's what I see here. It's like this was like perfect governance. This was like leadership governance.
Isn't it just game theory succeeding in the end?
It's game theory will always succeed in the end. Right. And it's perfect market created.
So the Nash equilibrium in this case was the current iteration.
Yep, this is so beautiful.
That's why I've always felt that if you just think of this as a giant game theory experiment, it'll always work out fine.
That's what it is.
You don't need to get too deep into the tech debate as such.
I've said it on your show a million times. Bitcoin is one of the largest socioeconomic experiments we've ever had in the history of the world. And this, if not, solidifies that argument. This is, if anything, if Peter Schiff can say Bitcoin has now no value, blah, 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 but there's a huge value in being able to study one of the largest socioeconomic experiments in the history of humankind.
Obituary 180. Jamie Dimon says, if you're stupid enough to buy Bitcoin, you'll pay the price one day. Yeah, $100,000 a coin.
So all the headlines leading up to August 1st, when we had a soft fork and a hard fork, all the headlines were again that Bitcoin was dead, Bitcoin was dying, Bitcoin would not survive August 1st. We were on the edge of our seat. Everybody was on the edge of the seat waiting to see what happened. And basically it was like Y2K. It all survived. We survived. Everything was okay. And from there, we saw, of course, from August 1st till the end of December, we saw an epic parabolic move in Bitcoin, and it went up to $19,000 by the end of the year.
That is correct. Once released from this controversy, the price started a hyperbolic move north, toward this 20,000 price. And I remember being quoted in the press that, once we got past SegWit, that this really opened the doors out to a new era. The scaling promise that would be coming looks like it's going to happen. And money started to flow into Bitcoin at an accelerated pace.
Bitcoin Cash went on its own separate way. Bitcoin stayed as the users wanted it. Into this mix came basically Chicago. It wasn't Wall Street, it was Chicago, and the options and derivatives. We are recording this quite a few hours before the futures markets open in Chicago. So Bitcoin has become a huge, massive international story. Everybody's hearing about it. We're getting a lot of tweets and a lot of emails asking how to buy it. People are panic buying, and you're certainly seeing that. I saw a chart of buys versus sells, and it's all buys, no selling. There's nobody selling. So you're seeing quite basically a melt up and then a roller coaster down. So it's very volatile. We're going to see a lot of volatility in Bitcoin prices as these futures markets unfold. There's going to be multiple futures contracts, multiple banks. All these banks are getting into it.
It'll create a bigger pipe for more money to flow into Bitcoin. Right now, the pipe is about, like this. It's a relatively minuscule market compared to the bond futures, the currency futures, stock futures. $5 trillion worth of Forex per day is the market. Bitcoin in that arena is a pipsqueak. By expanding these contracts, futures contracts, derivatives, and bringing Wall Street and Chicago into the mix, you're taking that small straw, which is an on-ramp for fiat, into Bitcoin, and you're making it massively bigger.
Well, futures markets are very important. They were developed for commodity markets, for farmers, agricultural sector, and they needed a way to hedge their costs, because they're a huge cost. The planting a field of corn, and you wouldn't know for months or not whether or not it would be hit with blight or bad weather or awful stuff. So you needed to protect and lock in your profits, the costs of doing business. But in terms of this futures contract, it settles not in corn or wheat or Bitcoin, the commodity. It settles in paper.
All derivatives, even though they may be leveraged 100 to 1 or 1,000 to 1, they're still referencing an underlying commodity that's held somewhere in custody. If you remove that custody layer, then everything built on top of it becomes instantly worthless. In the Bitcoin market, you do have now the hodlers of last resort, as they're called. They have within their abilities to do battle with the naked short sellers and the futures markets in a way that would restore price integrity, and I think that going forward that would become an issue. Well, the price suppression schemes through rehypothecation encourages collusion.
Yeah.
And in the Bitcoin protocol, it's all about game theory.
Yeah.
And so the game theory that has defeated a lot of players who have tried to co-opt Bitcoin, and the mining industry in particular, has prevailed. So these guys who are used to getting the easy collusion in the precious metals markets, they might risk 10 or 15% of their capital. If they get it wrong on this market, they could get wrecked.
That's exactly
entirely,
the point.
Right?
That's exactly the point. The financial industry controls the base collateral in the gold market through the gold vault systems. But they don't control the base collateral in the Bitcoin market. It's the hodlers of last resort who control the base collateral in the Bitcoin market.
Their risk is not 10 or 15%. It's several hundred
It's
percent.
losing it all.
Right, completely,
Yes.
and going deeply into debt. So, and that's, if it's a war, it's a standoff between hodlers of last resort and rehypothecators.
That's right.
The hodlers have an edge.
December 11th, 2017, Bitcoin futures begin trading on the CBOE in Chicago. The price of Bitcoin jumped by over $1,000 in the first few minutes of trading, which was part of the epic bull run from under $2,000 in August to nearly $20,000 by the end of December. On December 11th, you have the CBOE. Then on December 18th, you have the CME Group launched their futures contracts. Now, many in the world community, the likes of Jim Rickards, were saying once this Bitcoin futures happen, then you're going to see the epic paper shorts. You're going to see the crash of Bitcoin. And to be fair, on December 18th, that was the all-time high of Bitcoin, and thus began the descent of Bitcoin from that price.
Right. Well, as we were saying about Blythe Master, she came in at the behest of Wall Street to try to financialize Bitcoin, to separate the blockchain from the Bitcoin, and to try to destabilize Bitcoin. And Bitcoin overcame that attack. Now we have another assault from Wall Street, the futures contracts. That's another attempt for Wall Street to get in there and try to undermine Bitcoin, to try to financialize it, to bring in concepts like rehypothecation and other ways that Wall Street uses to control price and manipulate price. And this is coincidental with a top in the market and the ability to sell contracts that were in excess of what the market was actually showing was the appetite for these orders, drove the price down, one could argue. You needed a lot of demand to fill these paper shorts, these counterfeit shorts, and that demand was being fueled in large part by a mania that seemed to be unsustainable and was undergoing a bubble.
So we start 2017 at Bitcoin at $1,000. We have, over the course of 2017, the block size war ends, and the winners are the users. August 1st happens, we see the user-activated soft fork, and we see the hard fork to Bitcoin Cash. The bad actors in the Bitcoin space basically split off into this hard fork. That sets in motion an epic run, a parabolic run in the price of Bitcoin. We end 2017 with an all-time high in Bitcoin, over 19,000, hundreds of billions of dollars of market cap. That sort of conversation that you and Barry Silbert had when it was a mere $6 billion in market cap had come true. And Wall Street, the futures markets, the derivatives market, which is a quadrillions of dollars market, enters this space December 2017.
Yeah, we entered the year pushing 840 billion, almost $1 trillion in market cap, and the common wisdom is that we're heading to 5 trillion. We'll see how that works.